Recently, a lot of companies reported their earnings, and there has been very interesting developments. We're about to share with you what is our strategy going forward for the end of the year. But before that, Jonathan, tell us about this thing, new thing about Moomoo.
Yeah, just a quick 5 to 10 second ad break. So Moomoo is having this exclusive reward. Make sure to use our exclusive code, which is you can see in the slides, FIRE24. If you use this code and when you deposit 1,000 ringgit, you can actually claim a free money, which is up a 40 ringgit cash reward. And also you can get a bunch of more cash rewards like 100 ringgit, 400 ringgit if you deposited 10,000 ringgit, and 30,000 ringgit, you can get us free NVIDIA shares. So there's a lot of free benefits for if you haven't signed up for Moomoo, and make sure to check it out. The description will be in, the links will be in the description and comments, and use our code FIRE24. Okay, so going back to the video.
Okay, so nearly 860 companies reported their quarterlies for Q2, most of them, Q2 2024, which is, over 80% of companies. So just to share some stats, 30% odd of them are loss-making, almost 50% had a drop in Q-on-Q earnings. So Q-on-Q means, let's say like quarter 2 ending in June 2024 versus quarter 2 June 2023.
Yeah.
So we have, in terms of year-on-year, which is a more complete one, is pretty much similar, right? Just 2% difference. Dividend paying, right? Or people who paid dividends during the second quarter is slightly over 1/5 of all companies. So we are seeing actually a rebound, especially for KLCI. So the start of the end of the third quarter, you can say, is marked by the large caps growing quite a bit. And then what is trailing would be the small and medium caps, as you can see in the second and the third chart.
Yes.
So large caps, people who own banks, Tenaga, you guys should be quite happy. We are a bit less happy because we are mainly small and mid cap. So here are some of the direction of where these companies are growing. As I mentioned earlier on, there's banks. You can see those in green, public bank, CIMB. But then those that are very green, right? Tenaga, YTL Power has made a bit of a comeback. Although I have to say Nestle has dropped quite a bit from the high.
Yeah, exactly.
It dropped below 100, which is very, very interesting. I never thought that it would happen, but it did. Celcom, now you can see among all the large caps, I think only Press Metal is the notable exception that didn't rise. But yeah, you can see, right, large caps, big blocks. You see the big blocks, a lot of them are in the green.
Yes.
So here are the fund flows of some of these pretty large companies. You can see TM, Sime Darby, NationGate, I would say also in the technology space is considered very big.
Yeah.
I think Genetech had a pretty bad month.
Yeah, so you can see that the foreigners are more cautious in Genetech and NationGate as well. So they are exiting. Meanwhile, retailers are the one that is buying these two companies up. Probably it's because of some reports that is written by the institution.
Yeah.
So they are painting that their order book is looking pretty promising in the future. So that's why I think the retail investors are...
So this is for NationGate?
Yeah, NationGate and Genetech also, both also.
Yeah.
Yeah, and for TM and Sime Darby, you can see that. So TM, foreigners are actually getting into it, surprisingly. I think it has to do with their data center. One of the, I'm not sure whether is it a collation provider or is it they are operating one of their data center for one of the MNC company. So that's why that's getting a little bit more attention. Sime Darby, they are exiting. MyEG, they are also exiting. This clearly shows that the foreigners are not that confident with their Z-Trades or their crypto venture.
The whole crypto thing. Yeah,
they spent about
blockchain.
I believe their debt actually grew 7 times over the past 3 years because of this Z-Trades platform. They are pouring in money just to develop this new blockchain. So that's why you can see that there's a slight dump in MyEG.
Yeah,
now,
so I think the next one is the yield curve. So it has now approached an area where it is not negative or just slightly negative. And for those of you who don't know, yield curve is a pretty good, pretty reliable predictor of future downturns. Usually, you can say the middle of the negative yield curves you plus about 12 to 24 months is when you see a downturn in the market typically. Could be earlier, could be later. We never quite know, but it is one very reliable indicator. I'm not sure you have the chart here, but you guys can Google, right? Yield curve versus S&P 500. You can actually see a correlation. It always moves faster than the market. Why? Because it's expectations. So when people have when the yield curves invert, they call it, right? When it goes negative, usually the way they calculate is 10 minus 2. So the 10-year treasury yield will minus off the 2-year and they'll get this number here. So when it's negative, what it means is that people are less bullish about the future and they would rather keep cash, right? Because it means that the 2-year treasury, the short-term treasuries are now actually more valuable than the 10-year treasury. So what you just hold cash, in the short term.
Exactly. So right now there's a rebound in terms of these 10-2 treasury yield. I think because most of the investors are anticipating an interest rate cut for September.
Yeah.
So temporarily there's a slight small booster so that's why you can see that maybe there will be no longer an inverted yield curve. But one of the risks is this tariff, which actually has actually started to commission already. So the US imposed a lot of tariffs for Chinese imports, especially for EV, solar panels, and also semiconductor. So you can see that the amount of tariffs that they actually collected under Trump and also under Biden. So for Biden, it's actually almost 50 to 60% more as compared. And right now, September is the month where they are doing this, and I believe there will be a talk between China and US as well. So that's a discussion. But then we shall see how the market will react to this, because this is a pretty negative news. I mean, trade war is coming back again. It's like the 2018, 2019 vibes. So yeah, we shall see.
One thing that both Biden and Trump agree on is that China is the enemy. So this policy is unlikely to change, actually.
Yes.
In fact, even if they wanted to, it's very difficult. I mean, some information about the US politics is that the real decision makers in many ways is the bureaucracy. That's why presidents don't actually have that much power, because what happens is the bureaucracy actually informs and influence the president. The president can change in some ways certain direction, but generally I think the administration, regardless of administration, just the bureaucracy alone has always been pretty against China, and that's unlikely to change. It doesn't really matter who comes in, because if someone tried to change, there'll be a lot of resistance.
Yeah, exactly. I think also because right now China is catching up in terms of their chip also. I think
recently they report 3 years, right, behind TSMC.
Yeah, so that's actually a very, very big achievement, and the US is definitely, they felt threatened.
But of course, we need to be certain on the chip thing, whether in terms of what do they mean by just behind 3 years? Because I think there was a similar news about this in the past where they said it was 6 or 7 years, I can't remember, but the yield and the efficiency is still not quite there yet, whereas TSMC has that. But anyways, this is a technical discussion.
Okay, so this is what we know so far. The big funds are waiting, and they are, if you look at the movements, right, they are only betting on steady businesses. So like your banks, Tenaga as well, and also recently TM. So those are a few businesses that have a very strong cash flow and also probably a good dividend payout. And right now, from what we know from the discussion in Power Pro, is that there is no motivation to perform already, since they already made their money.
Yeah, we shared this in last week's video as well.
Yes, last week. Yeah, correct. So they're making about 20 to 40%. So they're calling it a year, and they are just waiting for more numbers to report. So these are a few strategies on how we can deploy for the remaining 2024. So number one, this is the best time to actually hunt for idea, because the fund managers are just not taking action. So if they're not taking action, and they are also kind of like rebalancing their portfolio, so it means some of the positions they are cutting. So these are the times are actually good to hunt for companies that is trading at a lower valuation than expected. Who knows, maybe there's a major sell-off that unexpectedly. So these are like a good opportunity if you are looking for better deals, because big funds are they just don't know what to invest. So number two is that if you want to follow what big funds are doing, then you can look for companies that are distributing dividends consistently, and best if it's growing. So I believe this is where they are going to be heavily investing on. Because right now, I think the money market fund is at its all-time high.
Mm-hmm.
So an alternative to this money market fund, which give them a yield of around 4 to 5%, is actually a better dividend yield. So you can say like 5, 6%, 7%, those kind of
REITs, well,
yields.
let's say, yeah.
So REITs, banks, or maybe even some certain plantation company that we talk a lot in FirePro. So maybe you want to check out more on those sectors that has been paying dividends consistently. And last one, this is my own personal one. Basically, I have been doing a very little short-term activities, which means capitalizing on short-term catalysts. And if you look at the chart later, we're going to show you, which is our catalyst portfolio, you will notice that the performance has been, for the unrealized positions are actually quite bad. That's the reason why is because I have actually been trimming off a lot of positions, especially for short-term one, because right now it's just too volatile and the fund managers are not really putting more money in, or they are just not getting risk on. They are all like risk off mode right now, which is why I think the lesser you do for short-term trading, I think it will be better lah. Any strategies that you want to add besides these three?
I think very important is to do the work. Best time to hunt for ideas. Just to expand on that, right now is to create a grocery shopping list. So if it comes true that there's going to be a downturn after the yield curve inverting, and this will be a global thing where stock markets will fall. And yes, that includes China investors because, some people say it's down so much already, how much more it can go down. It can go down more. In any case, the important thing is to have a grocery list of ideas. It doesn't really matter whether you know a downturn is coming. The question is when a downturn comes, and a downturn will always come, right? Do you have the list of companies that you can put money into to take advantage? Now, why this is important is because at our vantage point, it's easy to say, okay, this is what we're gonna do when the crash comes and all that. But when it actually comes, there's emotions get involved. And sometimes you second guess. So if you don't have a grocery list of companies to buy when it's shopping time, just like it was 3-4 weeks ago when the yen carry trade thing happened, if you don't have that list, then you're going to spend time both managing the emotions plus figuring out which company to buy, and that is going to confuse you. That's going to destabilize you, and you're likely to, even if you buy the correct stock, you might trade out of it because maybe it's down 50%, you buy it, and then it dropped 15%, then you start to doubt yourself, and then you sell. But if you had a grocery list, you just have to control your emotions on the people around you and the noise, but you have the confidence and the security that the companies that you're buying are solid stuff. You don't think, ironically, when you make the trade, you already know what to do automatic because the work has been done before. In the same way, if you play any sport that is fast, let's say a badminton or whatever, if you're thinking on the court on what shots to play or return, then you're probably going to make a mistake because you're overthinking it.
Yeah.
But if you had done proper preparation and training, then it's just automatic. You're not thinking, you're just executing. And that's where you want to be.
Yeah, exactly. Well put. Okay.
So anyways, some good and bad news depending on how you want to see it. FirePro is down. Very nice. When it was a lot higher at 59% last month, by the way, the portfolio is down about 12% year on year.
Peak.
Yeah, since the peak. And you can see there's a little bit more red than green, and that's to be expected. Now, here's the thing. When it was higher, a lot of people say, hey, should I join FirePro because, some of the stocks ran up already. So that question is less asked now. Some people might say they fear the market will go down further. But I think a lot of the companies that we covered that have done well has come down, I think 20, maybe 30%. So obviously for us, if we are still bullish on the company, we are excited about the fact that it has dropped. And if you're interested to find out what these companies are, then you need to check out our write-ups on FirePro. These are simple to read, easy to read write-ups that you can finish in less than 15 minutes. Even the boring portfolio, which was all up at one point, is also down. Have a couple of companies that are down, but most of them are still up. And as you mentioned earlier on, the Catalyst portfolio is showing a lot more red than blue right now because you trimmed a lot of the
good ones already. I made money, profited. That's why you can see that the returns for Catalyst also, it didn't really budge much.
Yeah,
The
it went
previous
from
one was
14
14.
something,
Now it's 13.82.
Yeah, so FirePro went from 59 to 40, and then I think Boring went from 7 to 4 point.
But I'm actually quite shocked that one of the company in Boring was up 22%. That was like a shocking factor.
Yeah, it dragged the returns.
Yes.
Is it a large cap?
Yes. It's
Okay, then it makes sense because large caps are growing. So anyways, if you want to get a taste of what these reports look like, head over to our free sample section. We have a couple of reports for you to see what's it like, before you make the purchase. You want to know what you're getting into. Best part is once you make the purchase and, within 10 days, if you feel, this is not really my thing, doesn't really suit my objectives or my expectations were not met, just send us an email and asking for a refund. We'll give it to you within 30 to 45 days. And at most, we just ask you why do you decide to refund, and so that we can improve in terms of having good feedback from you guys. In any case, that's the end of the video. I'll see you in the next one. Bye-bye.